Hello, everyone. Thank you very much for joining us for another crypto journey. Now, this week we have a very special guest, Aditya Das from Brave New Coin. Aditya is their in-house investment analyst and lead researcher, so he knows a thing or two. Like always, we welcome questions and interaction throughout the session, so please don't hesitate to ask anything if you're curious, and I will be taking those questions and stopping Aditya throughout. Welcome, Aditya.
Hi, Julia. Thank you for having me. Yeah, always a pleasure speaking to the Dasset community. It's quite a well-informed group that understands crypto really well. Second time I think you're having me on. So yeah, I really enjoyed last time, and I'm looking forward to chatting with the Dasset peeps today.
Cool. So are we.
Sweet. If we're ready to go, I'm just going to share my screen and get into it.
That'd be fabulous. Thank you.
Sorry. Okay, you guys can see that now, right?
Yes.
Okay, perfect. So yeah, today I will be presenting a presentation on the New Zealand dollar, which colloquially is known as the kiwi for obvious reasons. The bird, the fruit, and the people from the country. So yeah, it's been an interesting year for the asset for a number of different reasons. And yeah, just going to unpackage a few different things about the New Zealand dollar, and particularly its position within the global Forex environment. So just before we get into it, a couple of introductory slides and a little bit about myself and what I do outside of crypto. So the last year, I think the primary focus of my, outside of my professional life has been what I describe as the unholy trifecta of C's: stand-up comedy, CrossFit, and here's me in a suit to represent crypto. So yeah, that's just a bit about me. I like writing, I like exercising, and I like looking at crypto markets. And yeah, so as well as my role at Brave New Coin, I do a few different things within the crypto space. And today I come as a representative of Techament. Techament is the issuer of the New Zealand dollar stablecoin, the market's leading one-for-one backed stable version of the New Zealand dollar. So the New Zealand dollar stablecoin is a digital blockchain-based version of the New Zealand dollar, which represents its value, but by digitizing it, it allows for it to have a number of different use cases and utility tools. So that includes being able to be deployed in DeFi protocols and being a counterparty for digital assets directly through the blockchain and in a non-custodial fashion. So Techament is a registered financial service provider in New Zealand, and we are physically backed one-for-one by New Zealand dollars held in cash reserves. We are audited, and our proof of reserves are published by EY every 6 months. Our technology partner is Blockchain Labs, one of the leading smart contract auditing firms in the world. And the basis of the New Zealand dollar stablecoin is the fiat token framework developed by Center, which also underpins other popular stablecoins like USDC and EuroC. And yeah, just a little bit about the New Zealand dollar as well. The New Zealand dollar is the official currency and legal tender of New Zealand, as well as a few other places, including the Cook Islands. What is interesting about the New Zealand dollar is it generally tends to punch above its weight as a currency. It is the 14th most traded currency in the world, as published by the most recent foreign exchange turnover survey released by the Bank of International Settlements. And yeah, so it's FX turnover to GDP for New Zealand is historically high. And a few years ago, Christian Hawkesby, who was governor of the Reserve Bank at the time, said the reason for this was because non-residents of New Zealand are able to freely trade the New Zealand dollar and New Zealand dollar denominated financial instruments. So often, we'll get into this a little bit, people in places like Japan and the USA will have exposure in the New Zealand dollar because of this free access to it, or this easy access to it. It also is quite interesting as an asset because it is in this kind of Goldilocks position, similar to other assets like the Australian dollar and the South African rand, where it has certain characteristics of a exotic Asian currency, such as a high interest rate, but it's also got this sort of political and economic stability that you might expect from an OECD nation or a developed country. So it's sort of this sort of has this delta neutral appeal, which is why a lot of forex traders like having exposure to it. You'll notice that New Zealand was 14th in the most recent foreign exchange turnover survey done by the Bank of International Settlements, which tends to be the most robust forex turnover survey. And it was 10th when it was last published in 2019. So it's fallen to 14th. And I think the primary reason for this is the COVID-19 pandemic and so a fall in tourism, a fall in global movement, and a kind of resettlement towards less of these sort of exotic assets and more towards European assets and larger Asian assets like the won. As I've mentioned briefly in the beginning, it's been a tough year for the New Zealand dollar. So this chart shows year to date and in the last year how the New Zealand dollar has performed. The chart shows its performance against the US dollar, and it's down 18.61% in the last year. I mean, that doesn't make for very good reading. And we can see, about a year ago it was trading for just above 70 cents, and it slid to this current position of 0.58. But what will be kind of encouraging is we've sort of seen this bounce of 0.57. So we've kind of gained a few decimal places of value in the last few weeks and about the last month. So we are potentially seeing a sort of resettlement and a kind of a reversal in this sort of flight towards the dollar and the DXY being so dominant. Hopefully this means, at least for us living in New Zealand and earning in New Zealand dollars, that this reversal continues and we can push back towards that 0.7 level. What's also interesting, and what the chart below is the New Zealand dollar has also performed poorly against a number of other assets in the last year: the euro, the pound, the Australian dollar, and notably the Japanese yen. There are some interesting reasons, particularly with this Japanese yen relationship, for that underperformance, which I'm going to get into. Okay, so these are the three kind of things I want to talk about primarily in the presentation. So New Zealand's position as a high beta icon, this asset that has a lot of speculative value and people like making sort of market plays with. The second part was sort of be a focus on the biggest kind of story in forex markets in 22, and perhaps even financial markets in general. The dominance of the US dollar and its position as a safe haven during tumultuous political and economic times. And finally, just to close a little bit about the current position of the New Zealand dollar and a reversal in the Kiwi. So New Zealand dollar is considered a high beta forex asset, and it's a position it's held for a long time. And when I say it's a high beta asset, it means it exhibits high volatility compared to baseline assets or other assets, other forex assets. So this means an ability to outperform markets when they're doing well. So when, let's say, global GDP is at 2%, is growing at about 2%, then the New Zealand dollar will surge in value and be about 5 to 10%. And in the reverse, when the global economy is doing poorly, then the New Zealand dollar tends to perform even worse than that baseline. And if the global economy is falling by 5 or 6%, then the New Zealand dollar drops sharply. What's notable is that indicates this trend is the collapse in the value of the New Zealand dollar during the Asian financial crisis in between 1997 and about 2000. And the global financial crisis in 2008. And then similarly, what the charts will show is also the strong post global financial crisis performance of the New Zealand dollar when the global GDP was rising steadily, and things went back to normal, and we saw a return to just global GDP growth. So yeah, you see here this line between 1997 and 2000, like a real decimation in value. So I mean, what we're seeing now with the New Zealand dollar at 0.58, it's not anywhere near as low as it has been in the last like 30 years or so. And then markets start to perform better, and U.S. equities return to value, and the general state of the globe had this period of growth between the early 2000s to pretty much the GFC in 2009. And then we again see this huge dip aligned with a global financial crisis or a global recession. And yeah, what's notable, I mean, again, is that sometimes the New Zealand dollar, it's the volatility which can be a little bit surprising. Sometimes we expect our fiat assets to be kind of stable, particularly in comparison to crypto and as a crypto community, but the New Zealand dollar is a little bit different. The chart below here is what's known as the Buffett indicator, and that is the total market value of stocks compared to the US GDP. So the idea here is that when stocks are doing well, we're returning to like a kind of a speculative investment-based economy, versus when global GDP, US GDP is strong in comparison to the market value of stocks. And that's a sign of kind of safer, savings-driven savings over investments, and kind of a less risk-oriented market. And what we see is the New Zealand dollar tends to perform better when there is this sort of push towards a speculative economy or more of a risk-driven market. Yes, a couple of things is one, this little drop, this big drop in 2009 and 2010 is particularly sharp. And one of the reasons for this is the New Zealand's position as a very popular carry trade currency. Trading style, sorry. Cut out. Can you hear me? Yeah, okay, sorry. Yeah, my bad. So yeah, when a carry trading asset is a style of trading that originated in Forex markets, where a low interest rate currency is obtained generally by borrowing and then is traded for a currency that has a higher rate of interest. So the idea here is, if you're in a country like Switzerland or Japan with really low interest rates, you borrow the asset, you buy some New Zealand dollars, you're able to earn an interest on those New Zealand dollars. And because the interest rate is higher on the New Zealand dollars, you pay back your interest that you owe in the Japanese or Swiss currency, and you keep whatever interest is left over on the top. So yeah, so this is the interest rate of New Zealand. So you see, it's ranged between, between about, I mean, up until recently, when it did drop quite a lot, post 2016, it's kind of been at this sort of high 4 to 8 level, and it's generally a bit higher than other interest rates in developed economies. And it is particularly higher than the rates of interest in a country like Japan, where, I mean, if you look at it in the last 20 years, it's never been above 0.5%. So, if you can get your yen by borrowing at an interest of 0.5%, and then you are able to get some New Zealand dollars, deposit them, and earn like 5 to 6%. It's easy for you to pay back the interest you owed in yen and keep whatever interest you have left in your New Zealand dollars. So particularly for institutions in Switzerland and Japan, that trade between the franc and the New Zealand dollar is really popular, and it's kind of gone obviously a little bit less popular because of the drop in the interest rate of New Zealand. But again, we're seeing the interest rate in New Zealand push towards that 4% level again. So perhaps we'll see this trade kind of pick up in traction again. And yeah, so this is a chart which shows the NZD USD price in black and the yen USD price in orange. And what we see is kind of this inverse relationship between the yen and the New Zealand dollar. And it's a really historically very popular trade, the yen to the NZD. And this kind of shows it that they sort of move in opposite directions against the baseline. And you often see a lot of trading between the yen and the New Zealand dollar, and signals from the yen market to the New Zealand dollar market. So yeah, a little bit more about that. And yeah, so going back to that, that big collapse in 2008 and 2009, a lot of this was because during the GFC and during like the chaotic period in international markets, there was a lot of unwinding of this position and essentially a liquidity crunch, because people couldn't sell the New Zealand dollar, sell out of the New Zealand dollar into the yen fast enough, and you kind of got a speculative bubble collapse. And basically, Japanese traders were like, "We're out. We don't want to hold any more New Zealand dollars." And you saw this like shift, this swift, sharp collapse in the New Zealand dollars, driven by its not really economic reasons, but because of its position as a carry trade asset. So it's something to keep note of in the future. If you start to see the NZD like ramp up in value, the risk of an unwind can happen. And likewise, the other way around. Like if you see the NZD start to rise in value over the next year, it could simply be because of unwinding positions as opposed to economic factors as well. And yeah, so that's a little bit about why the New Zealand dollar can collapse, and this position as a carry trade. But there are also some solid economic reasons to buy into the New Zealand dollar as well, outside of the high interest rates. In 2014, Paul Bloxham, who was the chief economist for HSBC in Australia and New Zealand, called the NZD the rock star, called New Zealand the rock star economy of 2014. And alongside that, Kathy Lien, who was the managing director of BK Asset Management, said the New Zealand dollar was the hottest currency of 2014. And that was a time when the global GDP was high and growing steadily, and particularly countries like China were performing really well. And yeah, so international trade was flowing. The investment economy was doing really well, and people were backing the New Zealand economy and the New Zealand dollar. So the main factors why the New Zealand dollar performed so well during that period and the New Zealand economy were construction spending on Canterbury following the earthquake and the rebuild there, a housing boom fueled by low interest rates, strong net immigration into New Zealand, so a rise in immigration into New Zealand, and rising dairy exports driven by surging demand from China. And we'll get into the Chinese relationship with the New Zealand dollar a little bit, because it's almost as important as the relationship with the yen and Japanese traders. So this is the relationship between net migration and the price of the New Zealand dollar in USD terms. So what you can kind of see is this pattern where rises in net migration kind of precede pickups in the price and the value of the NZD. So kind of you start to see net migration rise first, and then you sort of see this pickup in the New Zealand dollar. And it's a pattern we see a few other times where net migration kind of picks up steadily, and then you see sort of pickups in the New Zealand dollar. And it does make sense because New Zealand is a small economy, and it relies. It's a small export-driven economy, and more net migration means more people using New Zealand dollars, and more immigrants means more workers and more people contributing to the New Zealand dollar. So in the last few years, when net migration has fallen away sharply because of the pandemic. Sorry, is there a question?
No, it's okay. I've answered it. It's all good.
Okay, cool. We've seen this fall away in the New Zealand dollar and USD terms. So, I mean, we're starting to see net migration like pick up a little bit. So hopefully this sort of trend continues and we get closer to this, zero net migration and positive net migration, and that probably, as historically indicates and intuitively indicates, should lead to at least some reverse in performance in the NZD and USD terms. Another really interesting chart, and I think this is kind of shows how much Chinese exports can drive the value of the New Zealand dollar is. So this is Chinese year-on-year growth in GDP versus in orange versus the New Zealand the NZD USD price, and yeah, I mean it's almost laid out on top of each other. So a weaker Chinese GDP and falling and weaker growth leads to the NZD falling in value against the baseline, the USD, and likewise when the Chinese economy is growing, it tends to perform worse. So it is quite an interesting chart. So yeah, I mean let's see whether this pattern continues. And yeah.
I have a question actually.
Yeah.
Interest rates going absolutely through the roof in New Zealand. I think people buying, looking to buy a house or refixing their mortgages. Do you have what's your thoughts on that?
We'll get into it. Actually, and maybe it's time, because I do have a slide towards the end which covers this as a headline. But yeah.
Sorry, I was a bit too premature.
Oh no, it's totally fine, and it's worth covering right now as well. But yeah, I mean the main reason they're rising is because of inflation, and it's necessary. We've seen this trend across a number of OECD economies and developed economies that turned to a regime of low interest rates during the pandemic to kind of boost the economy when there was this global shutdown, and somehow try to oil it when there wasn't any economic output. And that money printing and those low interest rates and that kind of cash injection has consequences, and the consequence of that is inflation. So I don't know, it is an unfortunate position, because if you bought a house during that period of low interest rates and you weren't on a fixed rate and you weren't a flexi, you're gonna feel some pain because your mortgage payments are about to get a lot higher. And so the other reason I pointed out, and I wanted to point this slide out, was we've had 5 consecutive 50 basis point rises in New Zealand, so 5 consecutive rises of 0.5%, and the Reserve Bank considered making it even higher. So all eyes will be on what they do next. It could be I'm not sure exactly what the predictions are or what the assessments are going to be with what the next OCR rise were, but I mean, yeah, it'll likely be the same or higher because inflation is still quite high in New Zealand. But yeah, it is, it's just the nature of the world we live in, where central banks have switched this policy of being very dovish and trying to drives investment even higher and higher instead of like cooling down the economy when it's doing well. And what that leads to is you have to kind of reverse the economy and cool it down very quickly. So it's a very like hot cool. So we had a lot of strong gains for a few years, and asset markets and commodity markets and property markets booming very quickly, and a lot of people made a lot of money. But it was a bubble, and that bubble unfortunately has to pop because, yeah, I mean, then you're talking if interest rates like aren't don't rise like steadily, then things like a bank run and another global financial crisis are on the cards. So yeah, it's sort of being stuck between a rock and a hard place, by design, and we could have seen it coming, but it is what it is.
We have a question from Jonathan.
Okay.
There is a
Yeah.
DXY for the USD. Does NZD have an index of sorts, maybe against its main trading partners?
It does. It does have an index, and let me just see. I have my trading view charts here. Give me 1 second.
No worries.
Yeah, there is a. Let me see if this chart is gonna. Okay. Can you see that? A
Yeah.
black line now? Okay.
Mhm.
So this is, I don't know too much about it, but this is the NZD index, which is on TradingView under the NASDAQ index. I don't know too much about it, but there are a couple of TradingView NZD indexes, and it kind of paints a reasonably similar sort of bleak story in the last year of a pretty decent fall in value. But yeah, sorry, Jonathan, I'm not exactly sure what assets are in it, but yeah, maybe if I can do some research and get back to you about that. But on that's what's listed at on TradingView, the NZD index. Okay, I'm gonna go back to the. Okay. Where was I? Yep. So yeah, just going back into what we are talking about, and it's Jonathan's question was a good jumping off point, because for the next little bit, I'll be talking about the US dollar behemoth. And yeah, it's really been the story of currency markets and asset markets in general. The greenback, the colloquial term for the US dollar, has been on an astronomical rise, and the DXY has hit 20-year highs, and the US dollar has been dominating against every other asset. I think it was a couple of months ago, it almost hit parity with the pound, which was sort of unheard of. And everybody, it's been gaining against safe havens like gold aggressively. It's been gaining against Bitcoin. It's been gaining against a lot of other assets. And yeah, there are a few reasons for this. I think the primary reason is how high the interest rate is in the US at the minute. So today there was a Federal Reserve meeting, the publication, sorry, of an FOMC meeting and a decision about interest rates. And yeah, they've done their fourth consecutive 0.75% rise, so another 75 basis point rise. So that pushed the short-term borrowing rate from 3 to 3.75% to 3.75% to 4%. Sorry, it was 3 to 3.25% to now being 3.75 to 4%. So yeah, I mean a 4% rate. So that's 475 basis. So it's gone up by 3% in the last 4 quarters. So I mean that's really high, and that's as high as it's been since 2008. And what happens when the rates are that high is just investment, particularly in a volatile market, becomes a lot less appealing. So why would you try and gamble on the stock market when you can earn 4% on a US dollar deposit? So we're seeing a shift towards an investment economy and a shift away from speculative assets towards the US dollar. And this is particularly affected within Forex market, like exotic assets like the Australian dollar and the New Zealand dollars. And these are from like global Forex traders. So if they had, NZD positions or AUD positions in their portfolio, they've kind of unwound them and shifted more of their portfolios towards the US dollar, particularly, because of the higher rates and kind of bond-based investments and just a US savings-driven economy. Sorry, that's the Fed chart, which is kind of similar to the New Zealand chart. I just need to make sure, but yeah, and we've seen this kind of sharp hike up in.
Aditya, Jonathan would also like to know, what are the main trading pairs for NZD?
So okay, the biggest one is USD. Yeah. I think after that is Australian dollar,
Okay.
yuan, yen.
Okay.
And then I think alongside that, next would be euro or the pound, yeah. And then the Swiss franc. But I think that the highest proportion by far is USD and AUD. They probably make up about like 70 to 80% of FX trading.
Okay.
So in that International Bank of Settlements survey, it found that the US dollar was behind 88% of all Forex trades. So I mean, it's just a US dollar economy, and particularly a market where Forex traders are trading out of their positions and going into US dollars. So yeah, what was interesting today is they did the 75 basis point rate hike. And while they did signal that they could slow down the rate hikes in coming meetings, it sounds like they will remain quite hawkish. What they said was they want to take into account the cumulative effect of all these rate hikes, both domestically and internationally. I'll get into the international factors for why it's important, why a high interest rate in the US matters. But yeah, they want to, because the US is such an important economy, and such a large economy. The large rate hikes and how this is affecting investors and businesses and mortgages and international borrowers as well is quite important. So they may decide to slow things down because of pressure. However, inflation remains high in the US, and during his press conference, Jerome Powell, the Fed chairman, sort of lent towards, we don't have inflation under control. We need to keep interest rates high. We need to keep this going, because if we don't, then the long-term effects could be immense. So yeah, this is just a chart pattern for the DFX published by one of the traders at Techemy. And yeah, you see this sort of ascending wedge, and a lot of market observers are saying the DXY is overvalued, and particularly if interest rates begin to slow down and we don't continue to see 75 basis points hike, you could see like a breakdown in this bullish pattern, and yeah, the wedge being hit, and a collapse of the DXY and an improvement in the performance of other assets against the US dollar. But that sort of remains to be seen, and yeah, it kind of depends on how the Fed approaches the next few interest rate rises and what inflation statistics look like in the US and other economic data like jobs data and that sort of thing, and unemployment data. So yeah, as mentioned, the rise in interest rates has led to a rise in demand it's for saving as opposed to investment. And the US dollar hasn't really been rising because of long-term faith in the US economy, but more because a belief in markets that the US economy will continue to raise rates to manage inflation. Julia, do you have a question or?
Yeah. So Jonathan has said Bitcoin. Can you see how the US can take advantage of the USD to take advantage of Bitcoin to extend its life as a reserve currency?
That is definitely something that they would consider. I'm sure Jonathan and some of the other listeners are aware of the gold standard and backing your reserves with a hard asset as opposed to just frivolously printing money. But I don't know if it's the kind of thing that they have in their mind. I could definitely see it having a lot of potential, because as compared to gold, Bitcoin is has a more transparent supply, so it's almost a harder asset because you know exactly how much of it there is and what the emission rate is, and it's much more transparent. It's also more transportable. It's easier to move around. It's got like a lot more fluidity and flexibility as opposed to gold, which is heavy and physical. So it's definitely a lot of potential. But I think we're a few years away from Bitcoin being a reserve asset, unless we see like a massive shakeup and we get a move away from the dollar hegemony, which I'm going to get into as well, hopefully if we've got enough time. But yeah, I think for the time being, Bitcoin has a lot of potential as a hard asset, and we could see a Bitcoin standard as a few years down the road, the same way we had a gold standard. And I think a lot of people appreciated the gold standard because it prevented central banks from just frivolously printing money and kind of being slaves to politics and political parties, and couldn't just print money to make the economy feel better whenever it wanted to. And yeah.
Well, let's hope so.
Let's hope so. Yeah. Going back to the question about interest rates. It's not just the U.S. central bank that's been raising interest rates. In the UK, Europe, on New Zealand, Australia, most of these countries have been in a similar position where inflation is spiking. There was a lot of money printing that went on in the last 2 years. Goods are getting more expensive. Wages can't rise as quick as inflation is rising. So the economy needs to be cooled off before unemployment starts spiking, and you get a full-on like economic collapse. So it's the idea here is to raise interest rates to cool off economies, and then hopefully resettle them to a point where we're not in a recession, but just a cooling off period, and then you can transition back to normalcy and a more settled economy. But right now we're in this position of we need to cool off. Inflation's too high. It's not being driven by economic performance. It's being driven by money printing, and we need to pull the jets back a bit. As mentioned, this is a recent chart of the US dollar's performance against a bunch of other currencies, and there are a few factors for why it's performing so well against the sterling and the euro and the Australian dollar and the Canadian dollar and the krona. Is one, the Fed has been quite committed to its interest rate rises, and I think some people have said that the Fed would remain hawkish and remain committed, but I think it has caught the market a little bit by surprise. It's stuck to its guns. 4 consecutive 75 basis points rises is as high as we've seen in a long time, historically high. And Jerome Powell has been committed in saying that inflation is too high. Whereas in other countries like the UK and Australia, we've seen a little bit more of a sheepish reserve bank and less of a commitment in the UK after the recent issues where the pound was sold heavily because of a negative reaction to the tax cuts. The Bank of England had to step in and kind of go into like a bond buying or bond repurchasing sort of regime, and that was the reverse of a high interest rate policy or monetary tightness. And the U.S. doesn't seem likely to be as like weak and seems more likely to steady the ship. There are other factors as well, like the conflict in Russia and Ukraine, and the likelihood that the energy crisis coming up in the European winter will affect Europe more than the US. So yeah, there are a few like market reasons for why the US dollar is outperforming these other assets. But I think the biggest reason is the US dollar's position as a hegemon, or a monetary hegemon. And this was kind of described in a book called Super Imperialism by Michael Hudson, which kind of went into sort of what imperialism and colonialism sort of looks like post World War II and post the breakdown of the British Empire. And we don't have the British Empire as like the country that leads the world. It's the US. And how it has kind of done this is dollar-denominated loans supported by entities like the International Monetary Fund and the World Bank. So a lot of times, developing countries like Pakistan and Argentina, they need to be bailed out for a number of reasons. Bad politics, corruption, and when they need to be bailed out because their economies have failed, the IMF and the World Bank normally offer them US dollar denominated loans. And these loans need to be paid back in US dollars. So yeah, particularly in the state of the world we're in, where a lot of these economies are struggling to pay back their loans, and they need as many US dollars as possible because the loans that they've been given are US dollar denominated and need to be paid back in US dollars. It creates this sort of cycle of demand for the US dollar when the world economy is doing poorly. So yeah, it's the system where the dollar is the reserve assets and the reserve debt asset for the world economy. And yeah, it just because these loans are getting more difficult for these emerging economies to pay for, they just continue to demand, and it becomes this like uphill cycle where they continue to sell as many assets as they can to try and accumulate US dollars. And it's not I mean, the US economy is large, and the Reserve Bank has stuck to its gun and done these 75 basis points hikes continuously. But yeah, because of these US dollar denominated loans which permeate throughout the global economy, yeah, it's created this position where gold used to be this reserve asset that loans were paid back in, and that was the medium of trade. The US dollar is now the medium of exchange, and it's what you need to facilitate everything, and particularly in the state of the world now, where debts are coming up and think people need to be paid. The US dollar becomes essential because it is this reserve asset. And speaking to a neutral asset like sorry, I think my audio cuts out. A neutral asset that isn't controlled by a world government becomes very powerful. Isn't controlled by a central bank. It isn't controlled by political systems. So assets like gold and Bitcoin are preferable as sort of reserve assets or assets that should back currencies. Because then, when we're in a situation where debts need to pay back and economies need to pay back loans, they're not compliant, or they don't have to worry about the US rate of interest. They just need to deal with a neutral currency or a neutral asset like gold or Bitcoin. Yeah, so just more about that. And yes, so another factor in that story is bonds. So so because of this position where like the US economy and the US dollar is so important to the global economy, and there's these risks that these countries might be struggling to pay back loans and they may default, then bonds from other countries begin to be sold for US bonds. So, bonds from places like Argentina and Pakistan, which may have built up during when the speculative economy, or when the global economy was more risk on, they start being sold off for US bonds, because I mean the US economy is too big to fail. It's unlikely that the US economy may default. So, in terms of a risk preference, you're probably better off holding US bonds than bonds from any other country. So yeah, so it's just sort of the safest asset in the world, and that's because of a number of factors that have built up over years. Yeah, and just kind of on the same thread, there's this theory called the dollar milkshake theory, where it was coined by a guy named Brent Johnson, who's the CEO of a firm called Santiago Capital. And the metaphor goes that there's a milkshake in a glass, and the froth at the top represents assets like equities, housing, crypto, foreign exchange, property, a few other things, kind of more speculative assets. And the milk, sugar, cream, and everything underneath the froth are dollars. And when interest rates are low, or money is being printed or injected into the economy through QE or lower interest rates, the milk, sugar, and cream push the froth higher and higher. And when interest rates are high and you need to drain money out of the economy, and you need to stop, injecting money into the stock exchange, or pushing the froth up, the rise of interest rates is like the milk, sugar, and cream being pulled out through a straw. So the milkshake, which is powered, the global economy, which is powered by the US dollar, because of entities like the IMF and the World Bank, when you get in to this like global recessionary type period, and high inflation in the US, and which leads to higher interest rates, everything else kind of goes down, because that the milk, sugar, and cream are being drained, and that froth sort of drops a bit. So yeah, it's one of these things where there's not a whole lot that the New Zealand dollar can do, because that's just the structure of the world. And every asset's from the S&P 500, the Nasdaq Composite, Bitcoin, Ethereum, crypto. Yeah, it's one of those things where we're sort of all at the mercy of the US dollar, and the milkshake is being drained at the minute, and the milk, sugar, and cream are being pulled out by the straw.
What a great way to describe it.
It's a good metaphor. I wish I'd come up with it myself, but yeah, no, it's very true. So yeah, and this is another interesting thing. So I think we can all acknowledge that the US is the largest, most secure economy in the world, and the 10-year bond rate in the US right now is yields about 4%. Why would you hold anything other than US bonds when bonds in the UK are offering a 3.46, a lower yield for a higher risk? A lot of these, Australia, Germany, Japan, France, New Zealand is a higher yield than the US, but for a much higher risk. So the US bonds are, yeah, it's kind of where you want to be, unless you're a counter trader and you believe that the US economy is going to collapse. But sometimes you can't fight the tape, and you just got to go with what the market's saying. And at the minute, it's sort of saying that, yeah, we like the US dollar, we like the high rates are offering, and we think there's chaos in the global economy, and a lot of these other governments have higher risk profiles. So we'd rather just hold these US bonds and these US dollars, which give us a high yield and are safe and secure. So yeah, just a little bit towards the end about factors that may lead to reversal for the New Zealand dollar. So yeah, as mentioned earlier, the DXY has been on a crazy run, really strong, really outperforming every other assets, having like 20% gains, which you don't normally see in FX markets. So yeah, it hits a position where it's overbought, and we see kind of a resettlement and a mean reversion type effect. Excuse me. And yeah, across the board, and the DXY pulls back a little bit, and other assets begin to perform more strongly against it because of a mean reversion. Other factors could be is a stronger New Zealand economy. One of the things that might help with this is net migration. China and a lot of other economies seem to be sort of getting over their humps, and we are seeing a little bit more normalcy in the global economy, maybe outside of Europe. But yeah, so net migration continues. We continue to go through this like post-COVID resettlement. Job data continues to look better and better. And yeah, just that the economy normalizes and we get over this like kind of 2-year slump, and we continue to get back into a position of being an export-driven economy that's supported by strong net migration. The other thing that could continue to boost the New Zealand dollar's appeal is if the Reserve Bank continues to commit to higher interest rates and combating inflation. That sends the right signals to market. It's not the best thing for new home buyers or people who bought homes with lower interest rates, but it would help the position of the New Zealand dollar. So yeah, so these are some headlines from the last day. We've seen a lot of positive headlines for the New Zealand dollar. So things like, New Zealand dollar underpinned by strong jobs data, some uncertainty about what would happen with the Fed reserve hike, and yeah, just a rise in risk appetite, which will boost the appeal of assets like the New Zealand dollar and the Australian dollar in global forex markets. And yeah, so the things that could hold back the New Zealand dollar, in the next few months is if inflation doesn't slow down, and if, particularly in the US, we continue to have these high interest rate rises, and this continues to be this, rise in, savings type mode, and investments continue to be sort of beleaguered because of this switch towards savings. So I think once savings in the US start to slow down a bit, that will be a big trigger for the New Zealand dollar to start pushing back up. The other factor, I think, as mentioned earlier, is because Chinese exports are a big factor in the value of the New Zealand dollars. Is if China has gone through this extended zero COVID policy and these strict lockdowns, so once that economy, if it starts opening up, then that would boost the terms of trade and the New Zealand export economy. So yeah, if the zero COVID perspective and the lockdowns continue in China, and there are signs that it might, because of concerns that they have about what long COVID looks like, then we just have to see. And the other factor is, yeah, so we've already seen in New Zealand and everywhere around the world how energy prices have been affected by the war in Ukraine. So that conflict kind of threatens to continue to affect energy prices, and if those energy prices continue to stay high, that's just another reason to be bearish and sheepish about the world economy. And as explained earlier, New Zealand is an asset that does well when the world economy does well. So yeah, if these kind of headwinds and these sort of negative kind of clouds loom over the global economy, then that could affect the ability of the New Zealand dollar to push upwards. Yeah, I think that's it from me, actually.
Some questions. Yeah.
Okay,
if
perfect.
anyone's got any questions, now would be the time to ask them. Thank you, Aditya. That was really good.
Oh, thanks.
Insight, yeah.
Yeah, it's
Interesting to
not.
see.
Yeah, I was just gonna say. Normally crypto is my forte, so it was kind of something different for me to talk about forex
Yeah,
assets and macro stuff. But yeah, no, I hope everybody got something out of it.
Doesn't look like there's any questions, so I think we will wrap it up there. But
Cool.
Again, thank you very much, and we look
No
forward
worries.
to having you again to talk about crypto maybe next time.
Yeah. I'd love to. Cheers.
Thank
Thanks,
you very
Julie.
much. Bye-bye.
No worries. Bye-bye.